Carhelpout.com. It's the convenience.
Is refinancing your auto loan a guaranteed way to save money? Many people think so. They see an advertisement promising a lower monthly payment, and they jump at the chance. It feels like a quick win, a simple way to free up cash each month. Who wouldn't want an extra $50, $100, even more dollars? The logic seems simple. A lower payment means you are paying less for your car. But is that the whole story? It's a common belief, almost a myth, that a lower car payment automatically equals savings. Today, we're going to pull back the curtain and expose the truth behind this common assumption. The reality is often far more complex than a simple monthly payment figure. The world of auto loans is filled with fine print hidden fees, clever math. A lender might offer you a seductively low monthly payment, but they could be extending your loan term by years. This means you end up paying them interest for a much longer period. In the end, you could pay thousands more for the same car, all while thinking you were saving money. This isn't just a small detail. It's the core of how many people end up overpaying without ever realizing it. This is why understanding the real numbers matters for every single car owner with a loan. In this guide, we will break down the entire process into simple, manageable steps. You don't need to be a financial wizard to understand this. We will walk through exactly what refinancing is and when it might seem like a good idea. Then, I'll give you a proven, step-by-step method to calculate if you will truly save money. We will use simple math and real-world examples to make it crystal clear. I promise to avoid confusing jargon and give you the straightforward information you need to make a smart decision. It's time to stop guessing and start knowing. Consider this your personal checklist for making a confident financial choice. We will cover where to find the best refinancing deals, banks, credit unions, online lenders. We will also uncover the hidden costs and risks that can turn a good deal sour. By the end, you'll have the tools and the knowledge to look at any refinancing offer and know for certain whether it's putting money back in your wallet or taking it out. Let's get started on the path to becoming a smarter car owner and stop overpaying for good. Follow along, and you'll see it's easier than you think. So, what exactly does it mean to refinance your auto loan? Let's break it down into plain language. Refinancing means taking out a brand new loan to pay off your existing car loan. You're swapping your old debt for a new one with a different lender, hopefully with better terms. Think of it like this. Loan with lender A. Better offer from lender B. Lender B pays off the remaining balance to lender A. Now the old loan is gone and you make monthly payments to lender B. The car is still yours, but the financial agreement has changed. To understand refinancing, know the 4 key parts of any loan. Principal, the amount you still owe. Interest rate, the percentage the lender charges. Loan term, how long you have to pay it back, measured in months. Monthly payment, the fixed amount you pay each month. When you refinance, you try to change one or more of these elements to your advantage. The goal, a new loan better for your financial situation. The most common reason people decide to refinance is the promise of a lower interest rate. You might see an ad that says, lower your rate, lower your payment. And it sounds like an undeniable win. Perhaps your credit score has improved significantly since you first bought your car. When you first got your loan, maybe your credit was just average, and you were given a rate of 9%. Now, 2 years later, you've been paying your bills on time, and your credit score has jumped. You check with a new lender and they offer you a rate of 5%. This is a game changer. The math seems obvious. A lower rate means you pay less interest over time. This line of thinking is what drives millions of people to refinance every year. The appeal is powerful. For someone feeling a bit of a financial squeeze, finding an extra $50 a month, $75 a month without changing their lifestyle feels like a lifesaver. This immediate relief is often the main and sometimes only factor people consider when making the decision to switch lenders. Let's look at a quick, real-world example how a seemingly good refinancing deal can be costly. Imagine you have a car loan remaining balance $15,000, current interest rate 7%, term left 36 months, monthly payment about $463. You see an offer to refinance, lower rate 5.5%, new monthly payment $350. That's a savings of over $110 every single month. It sounds fantastic. You feel smart for finding such a great deal. But here is where you need to look closer at the fine print. To get that low payment of $350, the new loan's term isn't 36 months. It's been extended to 48 months. You've added a full year of payments. With your old loan, you would have paid a total of $16,668 over the remaining 3 years. The total interest would have been $1,668. Now, let's calculate the total cost of the new loan. You'll be making payments of $350 for 48 months. So, you multiply $350 by 48. Which comes out to $16,800. The new loan will cost you $16,800 in total, meaning you will pay $1,800 in interest. You actually ended up paying an extra $132 in total interest over the life of the loan. On top of that, you're stuck with a car payment for an additional year. The deal that looked so good on the surface ended up costing you more money and keeping you in debt for longer. This is a classic example of how focusing only on the monthly payment can lead you astray. If this deal had a $200 fee, your total extra cost would have been $332, not $132. This is why you must look beyond the monthly payment and calculate the true total cost. Section 1. Gathering your financial tools. Before you can figure out if refinancing will save you money, you need to gather some specific numbers. Think of this as collecting your tools before starting a project. Without the right information, you are just guessing. And that's how costly mistakes are made. The first step is to look at your current auto loan. You need to know your exact remaining loan balance. Find it on your latest loan statement, or by logging into your lender's online portal. Next, you'll need the details of your current loan's terms. Find your current interest rate, the annual percentage rate, or APR. You also need to know the number of months remaining on your loan. If your statement says you have 32 payments left, then that's your remaining term, remaining balance, current interest rate, months left, current monthly payment. Now, it's time to look at the potential new loan. You need to identify the new interest rate the lender is offering. Make sure it's the final approved rate, not an advertised as low as rate. You also need to know the new loan term, total number of months. It could be the same as your remaining term, or it could be longer, or it could be shorter. Finally, and this is a step many people miss, you must ask about any and all fees associated with the refinancing, origination fees, processing fees, closing costs. Getting a clear written statement of all fees is non-negotiable. Okay. Section 2. The two sides of savings, monthly versus total. Once you have all your numbers, you can start doing the math. Imagine your current loan has a $20,000 balance, a 7% interest rate, and 48 months remaining. Your monthly payment is about $479. Over the next 48 months, you would pay a total of $23,000, meaning your total remaining interest is $3,000. This is your benchmark. Now you get a refinancing offer. The new loan has a lower interest rate of 5%. The lender offers to keep your loan term at 48 months. With these new terms, your new monthly payment would be approximately $461. This means you save about $18 every month. To calculate your total savings, you multiply your new monthly payment by the term. $461 times 48 months equals $22,128. Your total interest on the new loan would be $2,128. In this case, you save $18 per month, and you also save a total of $872 in interest, which is $3,000 minus $2,128 over the life of the loan. This is a clear win-win situation. But let's look at a different offer for the same $20,000 balance. This time, the lender wants to get your monthly payment much lower. They offer you the same 5% interest rate, but they extend the term to 60 months. Your new monthly payment drops to just $377. That's a savings of $102 every single month. But before you celebrate, let's do the total cost calculation. You multiply the new payment by the new term. $377 times 60 months equals $22,620. The total interest you'd pay is $2,620. This is still less than the $3,000 in interest on your original loan. So, in this second scenario, you save $102 per month and still save $380 in total interest. This still seems like a good deal, right? The catch is that you will be in debt for an entire extra year. You have to decide if the significant monthly savings are worth being tied to a car payment for 12 additional months. For some, the immediate cash flow is more important. For others, becoming debt-free as quickly as possible is the top priority. This shows why there isn't one right answer. You must calculate both the monthly change and the total cost change to make an informed choice that aligns with your personal financial goals. Yeah. Section 3. Finding your break-even point. The calculation isn't complete until you account for the fees. This is where the break-even point calculation becomes incredibly important. The break-even point tells you how many months it will take for your monthly savings to cover the total cost of the fees. For example, let's say your refinancing comes with a $300 origination fee. In our first scenario from the last section, you were saving $18 per month. So you would calculate $300 divided by $18. The result is approximately 16.7. If you're struggling to come up with cash for an emergency auto repair, you're not alone. That's why auto car repair loans offer a convenient way to gain quick access to the money you need when an emergency pops up. With loans up to $2,500 to $5,000. Visit carhelpout.com/repair loan to get started today. Don't forget, if you ever need to sell your house fast and as-is condition anywhere in the U.S., either to stop foreclosure, avoid county tax auction, or unwanted house, go to boracina.com/carhelpout and get a relief under house burden. Don't forget, if your local small business or good service website needs more traffic exposure from Google, Yahoo, Bing, and other search engines, go to carhelpout.com/SEO. They can help you when it comes to local SEO and online digital marketing service consulting. This means it will take you almost 17 months of making payments on the new loan just to pay off the fee. Only after the 17th month will you start to realize actual, real savings. Your total savings calculation also needs to be adjusted for the fee. We calculated that you would save $872 in total interest, but you have to subtract the $250 fee from that. So your net savings over the life of the loan are actually $622, which is $872 minus $250. Knowing your break-even point is crucial because life is unpredictable. If you think you might sell the car or trade it in within the next year, a refinancing deal with a 14-month break-even point is a bad financial move. This simple calculation protects you from short-term thinking and ensures you see the complete financial picture before you sign any new loan documents. All right. Section 1. The Big Three. Banks, credit unions, and online lenders. Once you've done the math and decided refinancing is right for you, the next big question, where to get your new loan? You have three main options: traditional banks, credit unions, online lenders. Traditional banks can be convenient if you already have a checking or savings account there. They offer familiarity and security, and you can often sit down with a loan officer in person. But large banks aren't always the place to find the lowest interest rates. Next, credit unions. Credit unions are non-profit institutions owned by their members. Because they don't answer to outside investors, they can pass savings to members, lower rates, and fewer fees. They also tend to be more flexible with lending criteria, which can be a huge advantage if your credit score isn't stellar. The main drawback, membership requirement. You can't just walk into any credit union and get a loan. You must be eligible to join first. Many credit unions have broad criteria, making it easier to join than you might think. The small hurdle of becoming a member is often well worth the effort, given the potential for significant savings on your loan. Section 2. The Art of Shopping for Rates. The single most important rule when looking for a refinancing loan is to shop around. Never take the first offer you receive. A crucial part of shopping around is understanding how to do it without hurting your credit score. All auto loan inquiries made within a short period are treated as a single inquiry. To start the process, you can often get a pre-qualified rate from many lenders. Pre-qualification usually only requires a soft inquiry, which does not affect your credit score at all. Use these pre-qualification offers to narrow down your choices to the top 2 or 3 lenders. Once you have a few firm offers in hand, you are in the driver's seat. You can say something like, "I'd prefer to work with you, but I have a firm offer from another institution at 4.9%. Is there any way you can match or beat that rate?" Sometimes they will say no, but you would be surprised how often a lender will improve their offer to win your business. After you've chosen your new lender, negotiated the best possible rate, and provided the payoff amount, the final step is to review and sign the new loan agreement. Read every single line before you sign. Verify that the interest rate, loan term, and monthly payment match what you were promised. Double check that there are no surprise fees or add-ons, like gap insurance or extended warranties that you didn't ask for. Once you sign, the new lender will send the payoff amount to your old lender. Your old loan will be closed, and you'll start making payments on your new, better loan. Congratulations! You've successfully navigated the refinancing process. Section 1. Your path to smarter savings. We have journeyed through auto loan refinancing. Now, let's bring it together into an actionable plan. The process boils down to 3 powerful steps. First, calculate your true potential savings. Second, compare lenders. Be a savvy shopper. Third, protect yourself. Watch for hidden fees and bad terms. The power to stop overpaying is in your hands. You now have a complete roadmap to choose confidently. Call to action. Do not wait. Take the first step today. Pull out your auto loan statement and run the numbers. Get at least 3 refinance quotes this week. Use the provided checklist, My Refinance Plan. Calculate, compare, check. Take control, put money back in your pocket, and start toward debt-free faster. You have the knowledge. Now, act. Carhelpout.com is the best way to get a mobile mechanic auto car repair service shop on wheels to come to you. Whether you're stuck at home or on the side of the road, our mobile mechanics are ready to assist you. We bring the repair shop to your location to save you time and hassle. We also provide emergency vehicle roadside assistance, such as car battery jumpstart, flat tire road service, running out of gas service if your vehicle stops or has a problem on the side of the road or any business parking lot. We understand that car troubles can be stressful, so we aim to provide quick and efficient solutions to get you back on the road as soon as possible. Additionally, we offer pre-purchase used car buying inspection checkup services review. Whether you're buying from local dealership or private car owner seller, either from Craigslist, Facebook Marketplace, automotive auction, or anywhere else, we can help you with PPI inspection. We can come to you at any location, whether it's your home driveway, your office parking lot, or even if you're stranded on the roadside.
Carhelpout.com. It's the convenience.